Bitcoin's been surging lately, and a lot of commentators and talking heads seem to be at a loss for an explanation. Well, listen, I don't claim to have all the answers, but let me give you my take on what's going on with Bitcoin. I think the reason that we're seeing it surge has little to do with the cryptocurrency itself and more to do with what's going on in China. Now, why do I say that? Well, let's take a look at a chart of Bitcoin over the last year or so. There's been a major collapse in pricing, which pretty much followed the downward trajectory of global markets last year, with the exception of when markets started to improve in January of this year. Bitcoin has been stagnant up till just recently. Now, I think the reason that Bitcoin started to stabilize at the beginning of 2019 was the same reason that we started to see the U.S. and global markets begin to improve. I think a lot of that had to do with the U.S. Federal Reserve changing their policy and taking a more dovish approach to interest rates, and more importantly, to China ramping up their stimulus and easy money policies. Let's superimpose the Chinese Technology Exchange Traded Fund, CQQ, alongside the chart of Bitcoin. Right about the time that Bitcoin bottomed out and started to stabilize, you had the Chinese stimulus kicking in and a rise in not only Chinese technology stocks, but the Chinese sector in general and most emerging markets as well. One of the key reasons that I think that Chinese stimulus helps prop up the price of Bitcoin is because as more of the yuan is flooded into the market, Bitcoin is a way to get around capital controls and to move the RMB out of China and to get converted into hard currencies. So I think as long as we see Chinese stimulus, we're going to see an increase in Bitcoin, but I'm less concerned with that. In fact, what I'm focused on is emerging markets, the Chinese economy, and specifically what I want to address in this episode, which is Chinese technology stocks. And so let's look at a long-term 10-week moving average of the ETF CQQQ. For a lot of years, up until the end of 2016, CQQ was going nowhere. It was locked in a tight trading range. But all that came to an abrupt end when the status quo got changed and Donald Trump was elected as president. Deregulation, tax cuts, a number of things resulted in what was called at the time synchronized global growth, and that caused CQQQ to break out of its trading range and appreciate 100%. But then in early 2018, President Trump started talking tough and beating on the trade war drums. That caused a pullback in the United States stock market as well as all global markets, but had a very severe and lasting effect on Chinese stocks and especially on the Chinese technology sector. Now, the trade war negotiations are not over. There's still tariffs being imposed on China, but what has changed is at the beginning of the year, the U.S. Federal Reserve has sent a signal that they're going to back off on their interest rate increases, and that came at the same time that China's President Xi started to re-stimulate the Chinese economy. And that put a floor under Chinese stocks, which they're now bouncing off of, and while I can't be sure exactly how high that bounce will go, I'm pretty confident that we'll at least get back to the previous high, which is almost 30% from where we are right now on the CQQQ. Now, I own the fund. I've owned the fund for some time now. And for now, my plan is to hold on to it until we start retracing the highs made back in January 2018. So let's wait and see what happens. As always, thanks for watching. Until the next time, this is John Pugliano wishing you the very best returns.